like I said at the top of the show, there are a lot of things that can go potentially right here. And I think it's important to remain constructive. But even if today's rebound, we know the market's going to be bumpy for some time. There's too many crazy things happen. The longer the conflict in Ukraine drags on, the worse it'll be for the market unless Putin caves, and it doesn't seem like he's going to. Wall Street craves certainty. Personally, I'm glad the Russian invasion has been so inept, but my personal feelings don't matter. The stock market doesn't care about good guys or bad guys. It just cares about the war being over. However, we've reached a point where I think it makes sense to sift through the rubble, searching for high-quality stocks that have been beaten down to actually ridiculously cheap levels. Now, I keep telling you to leave some cash on the sidelines. So you've got some money you can put to work at low prices. Tonight, I want to give you a shopping list. That's right, a shopping list. After doing a lot of thought about this, after stocks have come down to see what's cheap and what's not. At moments of tremendous fear, okay, where we're worried about both geopolitical and Fed-mandated recession, although Powell relented, it was pretty good today. I like to fall back on something tangible. I like to fall back on dividends. There are lots of different ways to value stocks, but those all get called into question during a major sell-off. Nobody quibbles with cash, though. And thanks to the sell-off, many great dividend stocks have actually become what we call AHY. It's a term I created during the 2008 period with help of my friend Myatt Horween, who writes with me. What it basically is an accidental high yielder. It's a company that sports a really good yield only because the stock's been clobbered. Remember, as the stock price goes down, the dividend yield goes up. All this indiscriminate selling has created many stocks with what I think are absurdly high yields that also happen to be dirt cheap on the earnings.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.